Very warm welcome to all the panelists here. Uh, I am not a founder and absolutely not a funder, but this is my absolute privilege to be here with you all. Just because as a part of my job, I release and receive a lot of funding news every single day. Of course, except Sundays, thanks to my boss. But the most silliest and obvious question remains unanswered. Where is this money coming from? And today, I have a very right set of experts sitting with me to answer this question. Where is this money coming from? I have 3 data points to share with you all to think about. Startups in India have received $885 million total funding in August 2022, just in August. By the end of 2023, it is expected that the total funding in Indian startups will reach somewhere around $180 billion. As of August 31st, 2022, Indian startups have raised $20.8 billion. If I somehow try to analyze the drivers behind this huge investment, disruption for sure is the major aspect. But from you all, I would want to decode this. How and what are the determiners, major factors that is impacting this huge investment? If we can start with you, Mr. Jain.
There's been a lot of talk about funding winter and so on and so forth. We have to see it, with respect to our country, and we have to see it with respect to the stage of investing. So the global economy is highly volatile. There is inflation, and we all know the reasons. So I'm not going to, recollect the last 9 months of newspapers back to everyone. It will be quite boring. India, we all know, is a shining star amidst this global turmoil. And the reasons for that are very well known as well. The Indian government played extremely smartly during this crisis and saved all of us from this huge energy-led inflation, which is now enveloping the developed world. Nor did we have to do any quantitative easing or releasing of liquidity, and therefore there was no pressure on deployment. The domestic capital has been re-energized into driving the Indian domestic consumption. And as we know, GDP, what is GDP? GDP is defined as non-traded goods and services, stuff which we are not importing from outside. And the whole country, is busy now producing for domestic consumption. There are PLI schemes in place. The government has made it extremely clear that if you want to sell to this large market, you can't be just attracted by this market and import everything over here. You'll have to make it over here. And that has led to, a manufacturing China plus one policy. The Western world has also realized, because of supply chain disruptions, courtesy China's zero COVID policy, and we all know the reasons why that is happening still. And you see the protests happening inside China now, finally, after 2 years. So China plus one policy is playing out very well in India's favor as well. All the drains on the exchequer that used to be on account of defense, etc., all of them are being curtailed. We exported $2 billion of defense items to Philippines, Vietnam, and some of the other countries. And thank goodness, I mean, India has some of the best engineers in the world. We're sending rockets now into space and commercial satellites, and finally manufacturing our own guns and bullets, which we should have done a long time back. But frankly, there was no impetus onto it, and I won't go into the reasons why. So, so therefore, the Indian economy is on a very strong footing. I was there in Bombay yesterday. I keep talking to my best ears on the ground, which is taxi drivers. They ferry a whole different segment of people from place to place, whether it is students, whether it is housewives, whether it is small tradesmen, whether it is corporate, whether it is government, and they have the best things to say. They say, and the guy in Bombay and the guy in Delhi today, who have hired, they're both saying, if I go out to work, I will get work. Okay, and that is the biggest difference in India today versus the Western world. Try and travel to the US, try and travel to Europe. They are in the grip of a severe crisis. Today, restaurants are empty, which used to be booked out in London, etc. There is no staff. They have closed out half the space, and there is no demand, local demand. There is no overseas demand coming in as well. The it's in a grip of a serious crisis, and they have to find their way out of it. But that's not the case with India. I don't know whether you guys know, but which is the largest domestic investor in Indian startups? Can anybody hazard a guess? Which is the largest domestic investor? I'll repeat the question in Indian startups. The one entity. Sorry. Sorry, what did you say? Mr. Tata, no, not at all. Any?
I think there'll be many. If you see individually, there are people who are the startup founders and all. They have sold out the businesses, or they have got the higher valuations, and then they are investing in the startup ecosystem. So like the Rajan Anandan is one of the person who invested a lot of money in the startup space in terms of number of startups and all. Basically, we go for the institutional investment. So there are, I think, many family offices are there, corporates are there, those have invested. So like Hero Group, and if you see from the North India point of view, Hero has invested in many startups. So you see, there are, I think, different kind of investors are there. Those are investing in their capacity. So the entire ecosystem has been built up now, and you see that from the individuals like HNIs or the startup founders, then the family offices, and then the institution like SIDBI and the other government funds are there. Those are investing. The insurance and banking industry also is investing in the funds basically, and they are further investing in the startup ecosystem. So as of today, if you see the overall capital in the domestic market from the startup point of view, huge capital is available, and everybody, the investor, I'll say that we all are investing in a different form. Either we are investing in the directly in the startup, or we are investing through the fund. But ultimately, the money is going to the startup ecosystem actually. So overall, as of today, if you see the more than 1,000 AIFs are there in the country, and which has happened in last 7-8 years only actually, and they have raised a lot of money. And they're investing the AIFs like his AIF and his AIF actually. They are at the stage where they have reached third or fourth fund actually. So many funds have already reached to the stage where they are at the fourth or fifth fund kind of stage, and they're getting money and they're investing money, and they are making money also. Practically, from the domestic capital point of view, there are some, I think, areas which need to be taken up, where the government should look at it. Still the money which is a sovereign money has not come in a big way. So the money which is of the PF funds, or the money from the large insurance companies is still not there in the system. And if you see on the other part of the world, a lot of money is flowing from these areas also, and which is helping to bring a lot of capital for the investment or domestic capital, I will say. So from my point of view, a lot of capital is available, lot of money is available for the startup ecosystem, and for investors are, I think, the entire ecosystem is there, which is helping the investments or investing in the startup ecosystem.
So the largest investor in Indian startups, the largest single investor who also invests, by the way, in our funds, is the Indian government. They've got 14x over the last 10 years. And they are going and putting that capital back. So that is a very lesser known fact. That is the Indian government, which is driving all of this. All the names that you mentioned, SIDBI, etc. This is all government. It's all our taxpayers' money, and they're putting more and more vehicles. The Self-Reliant India Fund, BIRAC, and many others. Electronics industry, biosciences, everything. They are putting the best foot forward for the last 10 years. So I think this is what's happening in the context. Early stage, there's a lot of capital. Late stage, generally speaking, it used to be financed by Japan, which was SoftBank. It was Tiger, which was the US investors. And it was the Chinese investors, which is Tencent, Alibaba, and you've heard all of those names. But today, because of Press Note 3 and what happened in Ladakh, I think the government, basically discouraged that, and they're all exiting their investments. Alibaba exited Zomato yesterday. And will continue to exit, many such investments. So they're no longer relevant. And Indian late-stage capital is yet to come about. I'm sure Ashish and Ashish will speak more about it.
We would surely discuss this in detail. I'll come back to you. Before doing this, I'll come back to you as well. what can be some of the major determiners, if we can say, in last 2 to 3 years, where we can see multimillionaire people or HNIs or second-time entrepreneurs are coming into investing into startups. Apart from traditional asset class, they are now stepping into startup ecosystem in homegrown startups. What is the driving force behind this?
I think the driving force behind this is very simple. They have seen you will find that there are a lot of first-time entrepreneurs. They have either sold off their companies or they have sold off their stakes at decent levels, and they are sitting on good amount of cash. They understand this asset class very clearly, and they think that money can be made here. And they understand the ecosystem also very well. So that is where that money is coming a lot. You will find that there are a lot of listed companies are there who are putting their the info is Naukri.com is the biggest example. They have a separate capital allowing for putting money into the startup ecosystem. They are the investors in Zomato. They are investors in a lot of other big names which are there in the ecosystem. So the new age entrepreneurs, the family offices, which they think that earlier they were only confined toward their own businesses. They are understanding the ecosystem. They are understanding that the whole this digital world is changing, and they are the people who are sitting with huge money. Earlier they used to look out for ventures outside India, but they are seeing the opportunities here. So family offices money, the new age entrepreneurs who wanted to who are sitting on the cash wanted to come up. So that is the money which is coming up in Indian ecosystem like anything. So that's
very well explained. Mr. Jain, I want to come to you. You mentioned about early stage, and there's no such challenge of cash or let's say investment. But there is some or the other challenge at the growth stage funding. It can be higher risk for higher returns, but what are the specifics there? Why are the investors conservative in nature when it comes to growth stage or later stage funding? We have many unicorns, but what is happening in that space? We saw in Q2 54 M&As, mergers and acquisition. Blinkit and Swiggy are the big ones. What's happening in growth stage area? Why is that conservative environment is still there?
Right. So in growth stage, the check sizes are higher, right? It's 25 to 100 million and at the very minimal. So which means that the risk has to be considerably lowered, right? Because anybody putting that amount of money needs to have a lower risk and deserves lower risk. Is no longer an angel investor check of 50 lakhs or 20 lakhs or something anymore. So there is, after all, a limited market in any segment, right? So therefore, there is bound to be consolidation, right? So if there were 5 startups which started 5 years ago, 2 of them will become market leaders. There is no doubt. And if the market is large enough, there will be a third that probably will have 10% market share. And many, books will tell you that, the largest, dominant market share will be about 40%. And that's happened industry after industry. You take any industry. And the next will be about 25%, and the next, 10%. And then there'll be a very large number of small players. Now, venture capital only believes in high growth businesses and believes in market leaders, because that's the theory on which it works. Because 9 out of 10 companies fail. Everybody knows about that at the early stage. It's a folio approach, and therefore you have to get those 2 winners. So those 2 winners have to be outliers. Now, to get those outliers, therefore the consolidation has to happen in the number 3, number 4, and number 5. And this has happened in all the industries. I mean, taxi for sure folded into an Ola. Snapdeal and various others, Myntra, etc., folded into the largest players, whether it was Flipkart, Amazon, etc., Jabong, etc., all of them folded up. So this happens in every industry. So growth capital will follow only those 2 market leaders, and therefore at this stage, the patience to go and invest in a 3rd or a 4th one, simply because the source was foreign capital, has dried up. That's what it is.
This gives me a very clear sense that there is just a need of settlement and a right strategy or right approach in order to invest money, and for startups to understand that fundamentals, principles, and let's say unit economics has to be in place. Also, profitability is becoming a key important factor these days, just because everybody was running after valuations. We have seen the case of Zomato, let's say, or Byju's, EdTech, particularly as a sector. Mr. Ashish, so interestingly, we have two Ashish on the panel, Ashish Agrawal and Ashish Padiyar. So, Mr. Agrawal, you as a part of your job, you get to meet a lot of investors and make them meet startup founders. In your opinion, what are some of the areas that investors are betting high on? They want specific things in the startups they are ready to invest in. What are some of those areas one needs to focus on?
Yeah. So we are working as a bridge between the startups and the investors basically, and we are meeting with the many investors, many startups regularly. And you see, from the investors' point of view, the investors are having different category of investors actually. So we go on the early stage investors. Practically, they are more, I think, interested to invest in those companies where the founders have the right, basically, kind of understanding about the business which he is doing actually. So the founder, they are betting on the founder actually. That's the first key criteria. Anybody, many times we have seen that they are seeing that it's not be single founder, there should be co-founder also. Tech guys should be there in that team. These kind of key ingredients are there which are seeing at the first stage by any initial stage startup investor who is funding to the startup. Then they are seeing the what is the problem they are solving actually. That's the another area. So many times we are seeing that people are coming out with the same idea which others are doing, and practically they are moving around for funding, but they're getting challenged to get the funding basically. So there should be a problem statement, and where they are solving that problem for the masses actually. It's not be that we are replicating the idea of some other company or some other startup. So that's the another way of investing or seeing in any startup. And the third one is basically the valuation, because there is a myth always, and when we are getting the proposal, we do valuations also. So many people are carried away with the very high valuation of the different companies or the companies which are in their sector and all. So they are always saying that this company has, this is a real fact actually, where this company has got this much of valuation, why we can't get it actually. They have to see where, at what stage they are, what solution they are giving, what is the scalability in the business, and they should be realistic actually. So from my point of view, these three things are very, very important when any investor is looking to invest in this current scenario. But now of late, this profitability is one of the area, but in case of early stage startups, the profitability will also be a challenge. But there should be a thought behind the startup founder in the mind that over the 3-4 years when they are building up the business, there should be a profitable in the business. It should not be a loss-making business forever actually. So these are the ingredients which are required or which are seen by the investors.
Absolutely, I agree. Mr. Padiyar, if you wish to come in and add to it, at Auxano, you are leading both separate funds, one with early stage startups and one the other with growth stage. What are some of the variations you are seeing, transformation in both the spaces, and how are investors coming up from? Who are the people who wish to invest in early stage, and who are the people who wish to invest in growth stage startups? What are some of the phenomena that are defining both the segments?
Resham, the one thing is very clear. The persons who are looking out to invest at the growth stage, the unit economics comes into the picture very, very clearly now. Earlier, there were things when people say that the roadmaps, I will not say not clear, but they are still hazy. But the things are that now the investors are looking out for very clear roadmaps from the startup team. They wanted to understand that if some company is in the growth stage, that means that they are above from the angel rounds and family and friends round. So they are at a stage of there must be around 3-4 years in the ecosystem. So what is the what is the growth plan for the next 5 years? What are the growth plans in order to give them the right exits? Whether they are planning for IPOs, whether they are planning for any mergers or acquisitions. So they are the questions, right questions, which they are asking nowadays. And while looking out for at an angel state, it's a very, very clear. Mostly it's like you are looking out for the right founding team. That is the most critical thing while investing, I think. So investor want to understand whether the balanced founding team is there or not. Then the second thing which they are very clearly looking out is that whether there is an innovation in the DNA. At an angel stage or early stage, you need to pivot your models a lot. You might be wanted to start something, but considering the market conditions, considering a lot of other things, you need to pivot a lot. So whether that innovation is in the DNA of the team or not is there. And the third thing is that how they are going to adapt to the market size, whether they are going to be category creators, whether they are going to be market leaders and all, how they are going to adapt towards that. So market size, again, that is they are looking out. So it's going to clearly differentiating between the early stage and growth investors. And they are very clear in the mind. Investors nowadays are very, very clear in the mind, because they have seen what happened with the recently listed companies. They have seen they are not looking out for a valuation right now. They understand that unit economics and profitability is going to the keyword, and they are very clearly looking out for that only.
So now is the time when investors are putting forward the difficult, hardest questions in front of entrepreneurs, and they just don't want to be very to get into a fancy, but they want to get into the fundamentals and principles that must be in the right place. Mr. Jain, if you can light us on how angel investment as a segment evolving, just because we are seeing many investors coming out from tier 2, tier 3 cities as well. This one aspect. Also, how going forward in 2023, which are some of the sectors when it comes to Indian startup ecosystem holds more potential? We know that there is no such sector which won't grow, but which the sectors which have more potential to grow and shine.
Well, two questions. I'll try my best to answer them. Although I think Ashish is maybe closer to some of the angel ecosystem. We, of course, get deal flow from angels. 10 years ago, this was the preserve of a few people who were, let's say, connected to the Silicon Valley. They saw this trend coming and they started to invest. And they were the earliest investors, whether it was Ola, whether it was, Flipkart, and whether it was, many of the companies that we now know as household names today. Then, this was the early adopters, so to speak. In every category, you have these early adopters, right? Now, what we are seeing is, and you spoke about angels coming from tier 2, 3 cities and even beyond. What we are seeing is actually late adopters and early majority, right, in the curve, which means that these are, people who have now finally got somebody within their 2 degrees of separation who's made a lot of money by angel investing. He has told them, look, I invested 10 lakhs and I took back 1 crore after 5 years. Okay. And this guy gets impressed and he says, oh, how did you do it? Even I want to experiment because I also can spare 10 lakhs today. Now, then, the whole conversation starts and there are cohorts, there are multiple cohorts based even on communities, if you will, based on states. There is Chandigarh angels, there is Jaipur angels, there is Marwadi angels and whatnot. So all kinds of networks have sprung up, and therefore investing, it's become really a mainstream now. And that's why I use the term late adopters and early majority. So virtually this has reached every other person who has got some disposable income to invest. The second question that you have asked is, which are the hot sectors to invest in? Yes, the economy is growing, but not everything can be hot over the next 5 or 6 years. So let me try and see from our fund point of view what is going to be remaining hot if it has been hot before as well. Financial services definitely is hot, right? India today is far more formalized than what it was earlier. Courtesy what? Courtesy UPI, right? The smallest of merchants on the street does not want to handle change, right? He says, here is a QR code, please transfer 29 rupees to me, because I don't have 1 rupee to get back. What does that mean? That means that the financial data of the smallest of merchants and the most lower income people in the country is now being mapped, right, somewhere. And that data can be used to underwrite. Underwriting meaning giving formal loans. Because earlier, where were they going? They were forming so-called committees. They were doing chit funds. They were, going to a sahukar. They were going to a money lender and taking money at 24%, 30%, 36%, whereas they don't need to. Their earlier desire to save on taxes and not generate financial statements and tell their CAs, I want to pay so much taxes. Now you construct the balance sheet. Sorry, please don't record this. But, that was the mindset. Today, that's not the mindset. I was just joking, but today that is not the mindset. The mindset is to grow. And the mindset is to get access to formal credit. Fintechs are exactly doing that. Banks have always been eager, but they didn't have the data. If you don't part with the data, they will go back again to the same people who is large businesses and medium businesses. Now you will need capital to grow into something which is bigger. So today, access to credit is becoming more and more democratized. So lending in finance is going to be extremely big to every segment of the economy. That continues to be hot. Second, climate and sustainability. Everything is being seen from that lens, right? I'm seeing, well, not this hotel maybe, but every other hotel, I'm sure you have noticed, is now substituting single-use plastic bottles for water with glass bottles. In the restaurants, you find glass bottles. Why is it that? So obviously, it is there in our mind not to fill up our oceans and all of that with this. Electric mobility has taken off in the country. 99,000 vehicles got, it's going at 65% CAGR. It's a matter of time because before we become leaders in this space as well. It's the cheapest form of mobility, both commercial as well as public shared mobility. And the other sectors like health, we have only seen 2 or 3 unicorns. We have to see far more unicorns. So that is going to come through as well. Education is not over. We have taken a contrarian view. We have not gone into K-12. We have seen a lot of K-12. I won't speak about that, what happened there and valuations and all of that. We have taken a view that India needs upskilling. I also need upskilling. Everybody in this room needs upskilling because our education systems are 30 years behind the needs of the industry. We have a lot of graduates, but they are lagging behind on employability. So therefore, we need to get them upskilled so that they can find meaningful employment and can progress their careers for the new industries and demands that are coming up. So I think these are some of the sectors that we are focusing on.
So for sure, finance, lending, climate, sustainability, electric mobility, for sure. Thank you, Mr. Jain. Mr. Agrawal, if I can come to you to discuss how and what is expected out of the government here. For sure, government has been a strong catalyst in this startup growth of our country. But what more do you expect?
Great. I think so. As he told also, Anup has told that the government did very well actually in terms of the entire ecosystem from the startup point of view, from the investment point of view, and in last 7-8 years, there has been a lot has been done actually. That's the, I think, that's the output that we have more than 100 unicorns. Capital in the system, as I told in my first delivery, government has to, I think, see that how the more money can come in the system. Government is doing, but actually, if you see the SIDBI fund, which has been started for 6, they have not consumed the entire money still actually, and commitments, still the commitments are not completed, the overall money which they have committed to the fund, and we see the disbursement are still, I think 30-40% of whatever has been committed actually. So that's the one part. SRI fund again, which has been started very recently, last year only, they have committed almost out of 10,000, 4,000 crore, but there's a disbursement in 100 crores only basically. So we have to see that whenever the government is coming out, any scheme or any fund for the startup investments and all, there should be the deployment should be there actually. There should be timeline for deployment. Then the money will go in the right time at the right place also. On the other side, we see the individuals. Actually, as of today, as per the guidelines, minimum investment by any investor in the startup or in the IF fund can be 1 crore actually. So you know that everybody in the country, more than 140 crore people we are having actually, and you see everybody is connected with the startup ecosystem. Everybody want to invest some money, like mutual fund, SIP and all. You can invest 5,000 rupees. Why can't you invest in AIF maybe 10 lakh rupees, 25 lakh rupees? Why the 1 crore rupees limit is there? Although we can understand that in starting, because this was a new asset class, the risk is high and all. Initially, the 1 crore limit was okay, but now it should be reduced to maybe in the phase 50 lakh and not 25 lakh. So people who are at the other level, they can also invest because we want to invest. People want to invest, but they don't have the channel to invest. This angel funds and all, somehow some of the angel funds are not regulated and all basically, so people are not having confidence. You can invest 5 lakh rupees in angel fund. So this is the another area which will bring a lot of money, domestic money in the system, because you see that we are a saving economy actually. So people want to invest, we want to see the growth of that money also. So these two key areas are there, and then as I told that the sovereign money, this PF fund and the insurance fund, the guidelines should be made more liberal actually, because there are some guidelines where they have to keep this much of percentage only of the total investment money in the startup ecosystem or AIF ecosystem. So banking, as you see that banks are having a lot of money, a lot of liquidity there in the system actually. But somehow they have the cap of this capital market investment under the AIF. There are capital adequacy. They have to keep very high capital adequacy on. So they are not investing out of maybe 30, 40 banks in the country. There are 4 or 5 banks. Those are still active, but rest are not investing in the startup funds or AIF. So the areas, if the government can look at it and then can, I think, leverage, do the, I think, some kind of relaxation, it will help. And one more area is there, taxation. Actually, you see in unlisted space, actually, whenever anybody investing in the unlisted shares and they are getting the capital gain, the capital gain is on the higher side actually in terms of percentage also, and the tenure also is basically. So you have to pay 20% capital gain on the unlisted shares when you are selling versus the listed shares actually. So this parity should not, this kind of, I think, differentiation should not be there. And then you have to wait for 24 months for this 20% also basically. So if these small things can be done by the government in this budget, we have also suggested to the government for taking up these steps. Let's hope on this new budget what will be the government relaxations which will come and will help you to the entire domestic capital and the startup ecosystem also.
Very well put. These can be some of the areas where government can come forward and help the whole ecosystem to unify, to collaborate, to come together, to put one single mission, that is to encourage domestic capital, Indian capital. Coming to you, Mr. Padiyar, this year has been very difficult in terms of in fundraising. Do you see a change in strategy and approaches of investors when it comes to funds deployment? Is there a change, or a change can improve the further scenario for entrepreneurs and startups?
Yeah, this year is a little difficult, but as Mr. Jain just initially mentioned, that the funding winter and all is not there in India. If there's capital is enough capital is available for the right company, for the right, if they are raising at a right valuation. So that's the thing which is always there. And apart from that, from an investor perspective, investor need to understand that it's a risky asset class. They need to have the right kind of time frame attached to it. If they are looking out for all what these all angel groups have populated or inculcated in their minds, is that they can get exits in 3-year, 5-year time frame. Yes, they can get exits, no doubt about that. But if they wanted to have a real, they wanted to understand the real asset class, they wanted to make maximum out of it, they need to have the right kind of time frame attached to it. So this is they need to understand, the investor need to understand that asset class is not liquid. They can't get liquid, the money can't be liquidated if they want, whenever they want. If they are looking out for liquid products, whenever they are coming into these kind of products, they need to have that 5, 7, 10 years at least kind of time frame. That is where they will able to create the real wealth. If they are looking out for lesser than this kind of time frame product, there are enough products available in Indian markets where they can generate a decent returns out of it. So this is the asset class which will have the time frame, right time frame need to be attached to it. Then only the multiples will come. They get fascinated by the stories of 3x, 5x, 10x kind of returns, but they don't understand the kind of actual time frame has gone into that in getting those kind of returns. So for an investor perspective, yes, they need to attach this thing with the right time frame. That is the biggest thing where they need to keep in mind while investing into any kind of angel groups, angel funds, or any funds which they are looking out for.
A very good point. A very good point. Miss, please.
Just to add on this government side, actually, one more area there which I think both of them also must be facing. Whatever the units of AIFs are there, practically there is no ecosystem in the country as of today for the secondary sale of the units actually. So anybody, as you told that, so the private company started, but there should be some, I think, the regulated channel, because more than 1,000 AIFs are there. How you will control private channels might be doing the different practices. So there should be some ecosystem, some kind of channel which the government should regulate it. And the secondary sale of these units can be there. It will help, because the people who have invested Instead, they want to exit, they should exit at the NAV. Why they should wait for 7, 8 years? Yeah.
So good to know. It was a lovely session. Before we close, here's my final question. Now that we have seen the market right sizing, now that we have seen the pandemic, how to handle that, we have so many solutions to it, so many innovations and disruptions in place now to answer and solve for the masses. Going forward, 2023, how would it shape up for startups, for investors, for the whole ecosystem, let's say for domestic capital? How will 2023 would look like? We'll take it up. We'll keep it very quick and short.
Ecosystem is, we all are talking about India becoming a 5 trillion, 8 trillion economy, 10 trillion economy in coming years. So this is the ecosystem which will shape it up. So the things are going to be extremely good for this, no doubt about that. You are just that you need to enter at right time and you need to wait for the right time to exit out of it. So that's.
As you told, the rising sector, actually, I'll see more and more climate kind of investments, the environment-related investment and the e-mobility kind of investment, actually, in this 2023. A lot of new startups are coming in this space, actually.
There's no dearth of entrepreneurs. I don't think, the last 70 years since independence, we've been a nation of job seekers. For the first time, I think I'm seeing a nation of job creators. In our living rooms, and should not be about how to crack job interviews. It should be about how to create value and how to create businesses and how to support them to do that. And that conversation is changing, which is why we see so many entrepreneurs coming across. So I think it is all positive. These two factors, I mean, the world is our oyster. 2023 will be very good.
That means India is in a very powerful position right now, and we are moving upwards and upwards. 2023, I think, will be an amazing year for everybody, including startups and investors. Thank you so much for this lovely and lively session. Thank you.